Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish but eventually bullish scenario, as we are looking for a three-wave structure to the downside, continuing the range for then a continuation to the upside for new highs. In this scenario, we're looking at both a regular flat or an expanding flat, where the expanding flat is usually a bit more common and a regular flat is a little less common. For a flat in general, you want to see price retrace to the 0.9 Fibonacci taken from the high to the low of A, which is the case. And for a regular flat, this is your most common target area between the 105 and the 0.9 for then a rejection, and then you want to see an impulsive wave C to the downside, where for wave C the target is between the 1 and the 1.236, which is between 33.3k and 32.8k, which also means you're then going to fill this wick over here, which I have on my chart, but some other charts do not. Now for an expanding flat, you're looking for B to go higher between the 1.38 and the 1.236, which is between 35.6k and 35.9k, and just above the 1.38 we also have this resistance area for some additional resistance between 35.9 and 36.2k. Now also in an expanding flat wave B, you're then looking for a wave C to the downside, being an impulsive structure, where then the most common target area is between the two 1.618s that you see over here, which is between 32.9k and 31.5k, with the upper 1.618 being pulled from the high to the low of A to the potential high of B, and the lower one is pulled from the low of A to the potential high of wave B. And you can see that also here we have some additional support, importantly the key level. So we have the key level, which is the low of this 1 hour candle, which also is the high of this 1 hour gap. Now whenever there's a gap, preferably you hit it once, and most of the time the first time it creates support, and you would then want to see price moving away, because the moment you have support and then you come down once more, probabilities are a lot higher to then fill this gap and go towards the lower 1.618. Now if we then have a look at the target box that I have in the middle, then I spoke about this target box over here earlier today. We had high number 1, high number 2 for a double top, where the probabilities as mentioned were higher to reach this target box, and then I mentioned we have to observe the reaction for potentially a move down or continuation. And I just want to show you what I look for when price hits these areas by going through a little bit of a Discord story. Now of course I won't go through all of these pictures, I've been very active today, but you can read some of the stuff yourself. But first of all I wrote, hey, the triple top is taken, let's see what's gonna happen. First thing I keep an eye on is the 3-minute CVD divergences, because if you zoom out on the CVD divergences, then what you see on the 50-minute or the 30-minute is bearish CVD, right? You had over here lower high on price, but a higher high on yellow, which is a bearish CVD divergence. But then on the 3-minute, and the more local the CVD divergence, the more important, on the 3-minute time frame, the moment you hit the target box, and you got a red candle, yellow moves down, and then you get a bullish CVD divergence, higher low in price, lower low on the CVD, which means you can see absorption. Now eventually the CVD divergences played out. We even saw some in-candle CVD divergences. You don't see this too often, where you have a green candle but there's more selling going on, as CVD is showing market buying or market selling. So the fact yellow went down means there's more people market selling in this candle than buying, but it's still a green candle. So there's absorption going on, price is moving towards the upside, and then eventually the last real resistance was the value area high of this range over here at the high of the target box, but then again hitting that value area high with the red candle. Price, bit of a red candle, okay, but look at the CVD. It just dumps to the downside, higher low in price, lower low on the CVD, for then eventually a higher probability of continuation to then take the 34.9k high. Then you also touch the 886, which in general increases probabilities to then take the local high, which we have done eventually at 34.9k, which is this high over here. So that is what I look at in a nutshell when something happens at one of my target boxes, just for your information, and hopefully you can maybe use it or it helps you out in some way. Now, if we look at the first bullish scenario, because I have a second one thanks to John, but in this particular scenario, we're looking at a finished zigzag ABC ending at the most common target for a wave C, for then a wave 1, 2, and continuation to the upside in a wave 3. The problem, however, here is this wick, because If you have a wave 1 to the upside and you look for a wave 2 is not allowed to take the low of your wave 1, which is the case on my chart. Now I realize on other charts that's not the case, but for this reason, I do not like this scenario, because this wick went below the low, and even though other charts may not have it, I used this chart for a very long time. This is not what I like to see, for this to be a wave 1 and this to be a wave 2. So this scenario for me doesn't really work. But then John in the group, he found his way back. He is very, very busy in real life, but he posted a potential triangle over here. I always love that John posts stuff. So he had a wave A, B, C, D, E, which is a potential. Wave A is very big compared to wave B. Wave B is a bit more, it's not the cleanest zigzag, but you know, there's a possibility. But wave A, very long compared to B and C, then D is long again. But D can be more complex potentially in a double zigzag type of move, and then a wave E. Now, I'm usually not a big fan of triangles, but if you do get continuation from this low to the upside and you do not reject at 36K for potentially an expanding flat, you want to see a move down. But if you observe the reaction, there we go again, but then you see continuation, then of course this over here preferably is the low for then potentially a triangle. But then again, also for a triangle, look at this wick over here, and that wick is his wave C. So on his chart, which is Binance over here, wave C ended above wave A. But on my chart, wave C ended below wave A, which again would invalidate a triangle, because wave C is not allowed to go below wave A. So yeah, that is a bit awkward. So currently the probabilities are higher to still at least move to the downside once more. Now, if we look at the different confluences, then currently the point of control is in the middle of the target box, currently where we are finding some support. If price moves below the target box and below the point of control, probabilities are going to be higher for downside, value area higher at 33.7K. On other charts, we have a triple bottom over here without this wick. So that is interesting for liquidity, and of course the key level at 32.5K. The story of CVD, we had bullish CVD divergences. Now these more locally here, they played out as the triple top got taken, so that's very nice. The bigger bullish CVD divergences are still active as price literally missed this high by $1. Probabilities are very high to still take this high. And we got bearish CVD. However, the 886 has not only been touched, but has also been passed on the 15-minute, which really increases the probabilities for price to eventually taking this high, because even if price moves down, probabilities are higher. The move down is a wave C or a wave Y, which then means you're going to find continuation to the upside and go towards that upper target box at 36K. So in general, you know, trading with the trend, probabilities are higher for continuation up, right? Now we do have news coming tonight, 10:35 p.m. Central European time, so make sure you trade safe, as volatility might be a thing. And if you then look at the probabilities of the scenarios that I showed you, then currently probabilities are still higher for the bearish/bullish scenario, where we are looking, well, an expanding flat usually has a bit higher probabilities compared to a regular flat. So if price moves up, I'm going to be looking for the reaction at 36K for then potentially a move down, or of course you already get a move down, but we're now finding support at the target box. We broke it, it was resistance, we're now finding support, potential continuation, right? Also, look at the trend. Sometimes it's good to zoom out. We are in an uptrend, so of course longs are preferred, no financial advice, but just make sure that if you're going to short, you have a very clear plan with entry requirements and good risk management, because you're going to be trading against the trend. So in all of the scenarios, the probabilities are higher to take this high. The probabilities are higher to at least move to 36K. The question is if you do it now or if you first go and do it like this. But as it stands, probabilities are higher for a potential flat scenario where you eventually find downside. But we got to observe the reaction at 36K, because 36K is the main level of interest. And if price gets there, we observe the reaction for potentially the reversal of a wave C. So we then move down in an expanding flat, which is more common than a regular flat, or we look for continuation. That is the question, but you now know some of the stuff that I at least keep my eye open for, that I look at. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.